Hi there and welcome to the weekly roundup for the week ending Friday the 25th of September. Now we hope you're enjoying these weekly reports and don't forget to subscribe if you wish to receive regular stock market content. Feel free to ask any questions in the comments below as we would love to hear from you, and also you're welcome to follow for our free market sector reports on banking, tech stocks and even IPOs using the link to subscribe below. So it's been a really busy week on the markets this week. The overriding theme here has been rising coronavirus cases and concerns that it's threatening to derail the very fragile economic recovery, particularly in Europe and also in the UK. Now, we've seen this week that Europe's business activity unexpectedly contracted in September in the preliminary readings of the PMIs, which unnerved investors quite significantly. Also here in the UK, we've had Boris Johnson tightening restrictions to stem the spread of coronavirus. Over in the US, there's been this concerns regarding the an additional fiscal stimulus package. And obviously, we've got the US presidential elections under 2 months away, and concerns have been rising that the Democrats and the Republicans just aren't going to get to an agreement, and now with the elections sort of taking over as well, it's just not going to happen. The most recent update last night was actually that they could be heading towards some sort of agreement on a $2.2 trillion deal, but that's not really been confirmed and it's still very much work in progress. So, I mean, across the week though, the fear has been that this wasn't going to materialise, and it still might not. As far as the stock markets are concerned, FTSE down around 3% this week. The DAX has been hard hit, it's down around 4.5% across the week. Obviously, let's not forget the DAX actually has outperformed the FTSE and other European stock markets on the rally from the mid-March low, so it potentially does have more to lose as well. Then over in the US, we've got DAX down around, the Dow Jones is trading around 3% lower across the week, the S&P around 2.5% lower across the week, and the Nasdaq is looking to lose around 1% across the week. Here in the UK, we've also had Chancellor Rishi Sunak sort of ride to the rescue. There have been many concerns about what would happen when the UK job retention scheme, the government's furlough scheme, came to an end on the 31st of October. Now, Rishi Sunak has offered he's announced a scaled back version of a job support scheme, which has boosted sentiment here in the UK. We've seen the housing stocks or house builders, they rallied on the back of that news with the hope that that would sort of offer some support to the housing market rather than this sort of cliff edge of huge unemployment from the 31st of October. The pound has also sort of managed to hold up a little bit on the back of that news against the euro, definitely, but the dollar, as I said, has been a really strong week for the dollar due to these fears over the lack of additional fiscal stimulus in the US. Now, the strong dollar across the week has seen commodities really under pressure across most of the week. As I said, today that's just turning slightly as the dollar's just weakened on the better news, but that's sort of been the theme for the week. I think the other thing to think about here is we've seen that the return of the COVID trade. So, you know, the retail, hospitality and airlines or aviation industry have been really under pressure, particularly because of these rising number of cases in Europe. British Airways owner IAG, they've had a shocking week. They're trading down, I'm just trying to think of it, they're down 4% today. Let me just check. They're down 18% on the week as a whole. This month so far, they're down 37%. They're trading at their lowest price ever at just 90p. And just think, I mean, pre-coronavirus, they were trading at £4.50. So they've really come off a lot. And I think there's going to be rising concerns, and the concerns are definitely going to stay as investors question the future of airlines, particularly should cases of coronavirus continue to rise. Ryanair, they've also had a really tough week as well. Banks are another one that have been definitely under the microscope. They've had a tough week. We had a new banking scandal at the beginning of the week, as sort of a suspicious transactions have been turning up. HSBC name turned up a lot on that report. HSBC on the same day were also put onto an unreliable list in China. Now this is really bad news for HSBC because they've been really concentrating a lot of their expansion efforts towards China. Now if they're appearing on this list, as the sort of state-owned newspaper suggests, then they could those plans for expansion could really come to nothing. The HSBC, again, it's trading down. It's trading down around 6% this week. It's around down 14% this month so far. Just trying to finish on some good news. So Pets at Home, they've had a cracking week. They traded up around 23% across the week after upping their profit forecasts. Since they've opened after lockdown, customers have returned, and they've returned with desire to buy a lot, and they've really pushed up expectations for the future, even if there is a second wave of coronavirus. Thanks very much for joining. As I said, please do remember to subscribe below if you're interested in receiving any of those reports. Thanks very much and have a good weekend.